On this episode of the Chris Elliott Real Estate Show, we're talking covering your assets with Michael Douglas of Richmond Insurance Services. And now to the show.
Welcome to the Chris Elliott Real Estate Show, where we bring you insights into the local Central Virginia real estate market, go in depth to answer your real estate questions and concerns, and interview local figures and influencers in the greater Richmond area. And now let's get to the latest episode with your host, Chris Elliott, and co-host, Maddie Ray.
All right, so very excited to have Mr. Michael Douglas of Richmond Insurance Services on the podcast today. How are you doing, Michael?
Doing great.
Good, man. I am super excited to have you on to talk insurance. No offense, probably not the sexiest subject that we've ever covered.
Come on now.
But it's super important for people to know, and I think it's one of those things where we've talked about this before on previous stuff we've did. It's super important, but because it's not the most interesting topic, I think most people don't pay attention to it. Anyway, so I'm jumping ahead. We'll get into it. Before we dive deep on all the nitty gritty, tell me about Michael. What's your background? How'd you get into insurance? What does the business look like today? Give me the backstory.
Well, I'm from Richmond. Grew up downtown in Fan. Went away for a quick little stint at Radford and then came right back to Richmond. And
very far.
Very far, yeah. No, I've really branched out.
Yeah.
But, I majored in business, never really had an intention in getting into insurance. And then long story short, I kind of found myself working for an insurance agency, a captive agency, and found out that I really liked it, enjoyed working with people, and the coverage is part of things. But, when I got real serious about it, I decided to hop out on my own back in 2011.
Okay, very cool. And what does the business look like today?
Business is very similar and closely related to real estate, so it's doing great. As far as losses go, kind of the other side that y'all don't have to deal with has been a great 2019.
Yeah.
Thankfully, because we had a rough 17 and 18 with all the crazy stuff that had been happening between hurricanes and hailstorms and things like that we have to pay attention to on our end. So
good time to be in the insurance business.
It was a rough couple of years. So
I
think everybody's able to breathe a sigh of relief after this past year. So, but business as well. New business is great because a lot of new home buyers, a lot of people moving to the area from what we hear.
Yep, absolutely. So is it just you, or you have a couple staff members? We were talking before we got on the air.
There are two others other than me in there. So we're all licensed agents in there, but there's Megan and Liz are in our office, and they're more customer service based. So they're there to service the customers.
They're nicer to talk to.
They're much nicer to talk to and deal with than me. Yeah. No, they're great. They've both been there for quite a while, and I'm lucky to have them. But I've kind of set it up that way just mostly because we're there to really take care of our clients and make sure they're all happy and answer any questions when they need it.
Yeah, absolutely. All right, cool. So, Mike, I came up with some questions. We talked about it before we jumped in the air. I'm just going to run through just a few questions that I think are relevant for people to know. We might go on a tangent, we might not, but I'm just going to run through the list with you if that's okay.
Sounds good.
Tell me, why is probably the dumb and obvious question, but why is insurance important with regard to real estate? I mean, what are we talking about? Why does insurance matter?
Well, you have to have home insurance in order to close on a home loan. So when you're buying a house and you're getting a mortgage, you're required to have home insurance.
The bank won't let you.
Bank will not
give you that
close.
Loan unless it's insured.
Correct.
And if the bank thinks it's important, it's probably important.
You're not closing without homeowners insurance. And it's one of those easy things that a lot of people will push off to the last minute. And I realize there's a lot of moving parts to real estate transactions. Sure. But that's really the most important reason why it's required. And there's a lot of requirements when it comes to actual loan value. You got to have the correct amount of dwelling coverage to go over your loan amount as well.
Sure.
So that's one thing that is also tied to that mortgage that we're able to help out with and kind of work with the loan officer and real estate agent to make sure that it all fits.
Yeah, absolutely. And if you're paying cash, you still want to get homeowners insurance.
You definitely still want to have homeowners insurance if there's no lien on it because you're going to be in a big trouble if something bad happens.
Yeah, and that's scary because like when you're getting when you're buying cash, unless your agent is telling you, like there's nobody really telling you like, hey, you need to get homeowners insurance. But like if that house burns down, like all your money goes up in smoke, pretty much.
You are responsible for it all. Yep.
Yep. Okay.
Absolutely.
All right, so let's dive a little deeper. Let's maybe nerd out on this a little bit. What are the different aspects or kinds of insurance that people should be thinking about? What are the different components that go in there? You talked about dwelling coverage. You know, talk to me about all that.
I could really make everybody's eyes glaze over when I get into this.
Let's do it. We could just cut it out if it's terrible.
You want to make sure that you have the correct replacement costs is the main thing. So communication is key. I mean, making sure you're telling them the correct square footage or year the home is built or any updates that's done to the house.
Now, when you say, I'm going to interject as we go along. Now, when you say replacement, we're talking about replacing the home.
Just the home.
Right.
So when you buy a home.
Because land generally doesn't burn down or, you know.
Correct.
Yeah.
Land's part of that purchase price.
Correct.
Land's part of the loan. Everything's there, right?
And a certain portion of your home's value is the land that the home actually sits on.
So when we do our home insurance side and we come up with our estimated reconstruction cost, we have to find out a few things about the house, the square footage, the year the home is built, and a lot of other things. But we really only care about how much that home costs to rebuild.
Sure.
So you can minus out the land value.
Yeah.
We have that's where the dwelling coverage comes from. And you want to make sure that you have replacement cost on the dwelling coverage, meaning not actual cash value. So you're not minusing depreciation out of that. That's how most insurance companies will insure homes. Some will not. You need to make sure that you do have replacement costs. And a lot of companies are starting to offer guaranteed replacement cost. So
Talk to me about that.
We have a few carriers that offer guaranteed replacement costs, meaning there's no cap to the dwelling coverage. So in common home insurance policies, there's your dwelling coverage and you have 25% increased dwelling coverage, which is a cushion. So if it costs a little bit more, then you have that 25% cushion.
Is that because the cost to rebuild that same house might be more than what it's currently?
So it's an estimate, yeah.
Yeah.
It's definitely an estimate, and things fluctuate. Labor cost, material cost, a lot of things will fluctuate a little bit.
Sure.
And like I said, originally it's just an estimate anyway.
Yeah.
So it's nice to have the cushion just in case.
Sure.
Hopefully, knock on wood, nobody will ever need it. However, things happen, and it has come up. So in those cases, you're capped at 25% increased dwelling coverage.
Okay.
And with guaranteed replacement costs, there's no cap to it. So it could cost 100% more than the dwelling. And so that way you have no worries of whether or not you're going to have enough coverage.
So I'm going to break this down for my own understanding, but maybe there's somebody out in the audience that's getting a little fuzzy here. So with just the 25%, they're saying, hey, if you've got a $300,000 house, 25% of that would be...
I'm not that good at math.
No, neither am I.
Let's do a $100,000 house.
Yeah.
25
Okay.
grand.
I like your thinking. So they're going to give you, if you have a $100,000 house, they're going to give you 125 grand, assuming that you can rebuild that same house or like conduit for 125 grand.
Correct.
But if it costs you 140 grand to rebuild that house, you're out of luck. You just got to build 125. Mm-hmm. You're saying now some of these companies are doing this new product where they're just saying, hey, to rebuild that same like-kind house, whatever it costs, we're going to pay for it.
Whatever it costs. The whole goal is to replace it exactly how it was.
Sure.
So that's the agreement typically in insurance contracts, that they replacement cost means they want to rebuild it exactly how it is. Even with old homes, a lot of homes in Richmond built in 1900, early 1900s.
Yeah.
Those typically are going to cost a whole lot more because they don't make those types of materials anymore. So it's very important when it comes to certain homes.
Yeah. Interesting. Okay. Mike, what are the common mistakes you see people making when it comes to real estate insurance? Whether it's, being penny wise, pound foolish, or not thinking about coverage for certain things, kind of what are those common mistakes or things to avoid?
I think sometimes people don't want less is more. They think less is more when talking to an insurance agent. So they're not telling them some characteristics about the house or upgrades that they're going to do to the house after they buy it, because it's going to avoid the contract, or it's not going to cover, they're not going to be able to offer that same policy if they did tell them that they're going to be updating the kitchen or something like that.
Sure.
When in reality, it's better to say these things. It's better to tell them that, hey, I'm going to redo this kitchen. I'm going to redo that. That way we know and we can plan for it, and we note it on the policy, or at least we set it up the correct way. That way, when something does happen, when a contractor's in there redoing the kitchen, we're aware that you're going to have some renovations being done.
Now, why is that important?
Liability.
Okay.
Contractors, I mean, more people in the house, more foot traffic, it increases the exposure.
More things that can go wrong.
That's right.
Yeah.
Yep.
Okay. Very cool. All right. So what's the difference? You had mentioned a captive insurer before. You're working with a captive company. Tell me, what is the difference between yourself as an independent broker and then maybe somebody else that's working with one of the big national companies, State Farm, Allstate, Geico, you name it?
So those ones that you're talking about, they're captive, meaning the agents are captive. They only work for that one insurance carrier. So when they're talking to the client, they have one option for them, typically.
Sure.
Typically speaking. So that, it may or may not be in the customer's best interest, but it's the only option they have, whether or not it is the best one for them. So they're going to pitch that one product to them.
Meaning that company's
that one
line of products or
correct,
that one product
that one
they
home
have.
Insurance quote, for example.
Sure.
So here, yes, customer, this is your best quote that I have, but it's really their only quote.
Sure.
So
it's your best quote because
it's their best quote.
It's
right.
the only one I have in my tool bag.
So I was captive. Again, I found that I really enjoyed it. I hated being captive because no one company is best at everything.
Sure.
There's not any company out there that's like that. So I've become a broker, means we work with a handful of different carriers, and we handpick the carriers that we work with and we get appointed with. So we're able to do a little shopping for the customer.
Yeah.
So one of the biggest benefits we offer to clients is doing the shopping for them. I mean, in a real estate transaction, they're overwhelmed. They got a lot to deal with. So we can take a little burden off them and shop for them. And that way they know that they at least have a few quotes.
Yeah.
Now, I don't work with every carrier out there. That's a common misconception that when clients will call and say, hey, you're independent, why haven't I got a quote from State Farm or Geico or whoever? And they don't work with independent agents. So I can't work with every carrier, but
Sure.
we can work with quite a few.
Yeah, and I believe it would naturally be a benefit of like, hey, if you can shop for 5 different companies, you can probably find that better
Most likely.
client a better fit than somebody that, like you said, has one product or they've got one thing to show them.
Right.
Yeah.
Mm-hmm.
Cool. All right, so right now we're actually going to jump into the fire round where we posted to our social, Instagram and Facebook yesterday, asking our audience what questions specifically they wanted to ask you. So now we're just going to jump over to the fire round.
Do your insurance needs change if you are renting out a house or a property?
Yes, absolutely. So great question because it's a completely different insurance policy. So you need to make sure that you notify the insurance agent that you've moved out. You have renters in the house. So we would basically cancel the policy, rewrite it as a rented to others policy.
It's a whole different deal.
Whole different policy. And surprisingly, there's a little misconception because you do remove your personal property coverage. However, prices are typically a little bit more expensive.
Yeah.
Because there's an exposure of somebody else being in the house, not the owner. Typically, people who don't own the house don't care quite as much about the house, believe it or not. So
really?
But you do want to make sure the tenants have their own renter's insurance. That way, if they do cause some sort of damage, that they have coverage for not only their own property, but they also have liability to cover your house for you as well.
I was going to ask you about that. There's something where they need to name you on their policy, right?
You can, you don't have to,
Yeah,
but that is nice
idea.
to have. That way you know when they cancel the policy, you get notified.
Yeah.
And you have interest in the house. Of course you do since you're the owner. However, it's the personal liability that you want to make sure that they have at least enough of to where if, God forbid, they were to burn down the house, they have enough personal liability coverage to pay for the house to be rebuilt.
Oh, okay. Interesting.
All right, perfect. The second question would be, do I need to update my policy every year?
Not necessarily if nothing has changed. So it's always good to check up on your policy at least every 2-3 years, I'd like to say. We try to look at policies every year.
Yeah.
But if nothing has changed, it's typically no reason to call in or at least to make any changes on the policy. If you're doing renovations or if anything else is changing in the house, definitely notify your agent. That way we can make the appropriate changes.
Additions.
Additions, renovations, that would increase the dwelling coverage, because you want to make sure that you have the correct square footage on there and the correct builder's grade or custom grade of kitchen that you have.
Yeah, finishing a basement, things like that.
Absolutely.
Yep.
Awesome. Is there anything different about insuring a vacation home?
Yes. Short-term rentals are a little harder to find a place for. Typical rental policies or rented to other homes are meant for 12-month leases. There's vacation homes and there's Airbnbs, and there's a lot of these things coming out here recently that
It's probably like a new thing for you guys.
it's similar to Uber, where nobody wanted to insure it for a year or two until they sat back and watched it for a while. And now that people have sat back and watched the Airbnb thing for a while, a lot of companies have become a little more comfortable with them.
Sure.
So though a lot of companies said no for a long time, and most of them are able to insure those short-term rentals.
Okay.
Perfect. Last question would be, do I need flood insurance, especially just being in Richmond?
Surprisingly, there's some.
If you're on the James.
Yeah.
Surprisingly, there's a lot of flood zones. Now, let me back up. Everybody's in a flood zone, so everybody can purchase flood insurance.
Yeah.
You're at the top of the hill, you can buy flood insurance.
Sure.
It's just not going to be very expensive, and that's typically flood zone X as an X-ray. So, and then there's a lot of other zones, a few others here in Richmond that are fairly common, surprisingly, with these little creeks and. That are around town that mortgage companies, for example, will require in order to get the loan. Not only do you have to have home insurance, but you have to have flood insurance.
Yep.
So as a broker, we can look around at flood insurance as well. So.
And one of the things, if you're buying a home, correct me if I'm wrong, but you can look at that property on FEMA's website and tell whether or not it is in a flood zone or what flood zone it's in before you even contract on that property. So that way you don't end up 3 weeks into a contract, you spent the money on inspections, appraisal, all that fun stuff, and then, a week before closing, your mortgage broker, your insurance guy calls you and says, oh, by the way, this is going to cost you another X amount per year because you need flood insurance.
It can get very pricey sometimes,
Yeah.
depending on the zone, and it can be a major surprise if it's a few grand a year that you have to fork out that you didn't know about.
Especially in like the Tuckahoe Creek area, I've noticed.
That's what I was going to say. That apparently a lot of the West End was built on that little marshy areas. So it does
Swamp.
back up to a swamp and little creeks that do flood.
Yeah.
And you can even call your agent when you find a property, for example, to say, hey, look, is this in a flood zone? And
Sure.
they can look it up typically.
Cool. Well, that was a fun round. Mike, if people want to get a hold of you, if they want to quote, if they just want to reach out and say, hey, what would be the best contact information for them to get you at? And we'll post this on the video.
All right, great. So we're located in Innsbrook, right down the street from your office here. So you can go to our website at richmondinsuranceservices.com.
Nice.
Our phone number is 804-270-1115.
Beautiful. Okay. Mike, thanks for coming on
Thanks for
the
having
show,
me.
my friend. That was that episode, and we look forward to seeing you guys on the next one.
Thanks.
Thanks for joining us for the Chris Elliott Real Estate Show. If you have any questions or suggestions for future episodes, please contact Chris Elliott at chris@chriselliottrealestate.com or by phone at 804-980-1898. And please join us again next time for the Chris Elliott Real Estate Show.